Okay, everybody. I'm sure everyone tuning in tonight has seen what's been happening on the geopolitical front. This is by far the biggest event and escalation the world has seen in a very, very long time. Uh, Firstly, welcome. It's actually been a couple of weeks since our last recap stream, and honestly, a lot has changed since then. The global backdrop right now looks completely different from what it was a very short time ago. Since February 28th, we've seen major escalations in the Middle East involving the United States, Israel, and Iran. What started as coordinated strikes on Iranian targets quickly spiraled into something much, much bigger, with missiles and drone attacks across the region and growing fears now that this conflict could actually spread further. We're now seeing military activity across several parts of the region, shipping disruptions, and escalating tensions that have put one very specific location at the center of the global conversation. And I'm only talking about the Strait of Hormuz. Now, if you've been following the news, you've probably seen a flood of headlines over the past few days. There have been airstrikes, there have been shipping disruptions, even oil infrastructure attacks. It's honestly a lot to keep up with. And when there's this much information overload, it becomes really difficult to figure out what actually moves markets. Every headline feels important. Every sort of new development feels like it could move markets. But in reality, when it comes to global markets, including crypto, during geopolitical events like this, things are actually a lot more simpler than they appear. And more often than not, it comes down to one thing. I'm talking about energy, or more specifically, oil. If you strip away all of the noise, oil and energy flows are often the single biggest driver of how global markets react during times like these. And that's exactly where the Strait of Hormuz comes into the picture. Now, while the headlines might seem a bit chaotic right now, a lot of traders right now are actually watching something very, very simple here. They're watching the price of crude oil. The thing is, crude oil is actually the clearest real time signal of how serious the market believes this conflict could actually become. Now, if oil stays relatively stable, markets tend to treat geopolitical events as a sort of temporary headline risk. But if oil, like it is now, starts moving aggressively higher, that's when things start to become a real macro event. And that's why in this stream, I'm going to focus on something very, very specific today. We're going to break down exactly how disruptions in oil flows impact global financial markets. Basically, what are the sort of knock on effects of this onto markets, including crypto? We'll talk about why energy markets sit at the heart of the global financial system, why monitoring crude oil prices is actually one of the most important indicators right now, and why traders across every asset class are currently watching the Strait of Hormuz so closely. But here's where things start to get really, really interesting. Now, if I toggle over to the Bitcoin chart, the volatility has been there across markets, across traditional markets, even gold. For example, if I go on to the gold chart today, we've seen a steep decline. Traditional safe haven, this is its moment to shine, but we're seeing volatility here as well. But coming back to Bitcoin, since the start of the escalation, Bitcoin is actually up, believe it or not, by around 13%. So we've actually seen a rally here, and it's not just Bitcoin, it's most cryptocurrencies, right? If you look at Ethereum, Ethereum is up. Let's take that from February 28th. It's up again around a 12% gain. So we're seeing something very, very interesting here. Bitcoin and parts of the crypto market have actually been holding up surprisingly well, given the circumstances. And that actually raises a very, very interesting question. What exactly is the market seeing here? Is this simply short term volatility, or are we starting to see a new type of behavior emerging from crypto during geopolitical shocks? These are the questions that we'll try and tackle. So let's firstly start off with the Strait of Hormuz and why it matters so much for global markets. Then we look at how oil shocks ripple through the financial system. And finally, we'll zoom out and take a look at what this entire geopolitical event might be telling us about crypto and crypto's role in today's world. There are some interesting use cases that have actually been highlighted through this entire event, and we simply cannot ignore that. But firstly, let's go ahead and actually discuss the Strait of Hormuz, why it's so important, and why it's very, very crucial to monitor the news coming out of here. Okay, the thing is, if you want to understand why markets are reacting the way they are, this is really the first piece of the puzzle. Now, since the escalation began on February 28th, when the US and Israel launched these airstrikes on Iranian targets, the situation in the Gulf has become extremely intense. Iran has responded um, with several strikes across the region, including attacks on infrastructure and military targets across the Gulf states. And almost immediately, attention shifted towards this passage, the shipping passage in the Persian Gulf. Now, Iranian forces began warning vessels that the passage through the Strait of Hormuz was not allowed, and shipping groups started reporting disruptions and diversions. Now, importantly, shipping through the strait as of today hasn't completely stopped, but the risk premium, the risk that's attached, has dramatically increased. And that alone is enough to move prices across markets. So, why is this such a huge passageway? The thing is, the Strait of Hormuz is it's no ordinary shipping lane. It is arguably the most important energy uh, choke point in the entire world. It's basically a narrow waterway that sits between Iran on one side and Oman and the UAE on the other. And it connects the Persian Gulf, where most of the world's largest oil producers are located, to the open ocean, right? And what makes this passageway so critical is that roughly 20 million barrels of oil pass through the strait daily. And that represents around 20% of global oil consumption. So just think about the sheer scale for a second. One out of every 5 barrels of oil used globally passes through this narrow corridor. And it's not just oil either. There's large volumes of liquefied natural gas, uh, and especially this is exported from Qatar, also passes through the same route. So what this means is that the strait essentially acts as the main energy source connecting the Middle East and the rest of the world. And there's this really, really cool graphic as well, which basically explains the countries are in that basically are super dependent on this trade, right? You can see it goes to Asia primarily. Countries like China, India, Japan, South Korea, they rely heavily on energy shipments moving through this corridor. And in fact, roughly 84% of the oil moving through the Strait of Hormuz is destined for Asian countries. So when tensions like this rise in this region, Analysts, investors are thinking about the global economy and they look at this passageway. And ultimately, any sort of disruption of oil flows here, even temporarily, has these ripple effects that will spread everywhere. Now, what we've seen is that oil prices have spiked almost immediately. If we go over to the crude oil price, we can see that since, yeah, there you go. So since the start, we're already up around 10%, right? So we've seen oil react almost immediately, but the consequences wouldn't stop there. And that's where I want to discuss the importance of oil in this whole conversation, in this whole environment, and how this has a direct impact on your crypto portfolio. So let's strip it down. Oil at sits as the foundation of the global economy. Think of it like this, right? Energy is the input cost for almost everything: transportation, manufacturing, shipment, electricity, agriculture, even food production. So, when oil prices move sharply, the effect begins a sort of cascade across the entire financial system. The first place you usually see it is in inflation expectations. Higher oil means higher transportation costs. Higher transportation costs mean higher prices for goods and services. Now, this feeds directly into inflation. And when inflation expectations rise, central banks suddenly have a much harder time cutting interest rates. And this is where markets start reacting. Equities can come under pressure because higher interest rates reduce liquidity, and of course, crypto as well. Now, currencies as well. Currencies can start shifting as capital flows uh, towards, perceived safe havens. We haven't seen that play out yet. Uh, and commodities themselves, especially energy and metals, can become extremely volatile. So, what begins as a geopolitical event in one region quickly becomes a global macro event like it has now. And that's why traders across every asset class are watching oil prices. If oil remains stable, markets will tend to treat geopolitical tensions as a sort of temporary news. But if we continue to see this sort of aggressive higher highs, that's when the entire narrative shifts. That's when markets start repricing inflation and growth expectations. So ultimately, this is the asset that we need to be monitoring for the next couple of days to weeks. Okay, so now that we've talked about why oil markets sit at the center of this situation, let's actually turn our attention to something that has been quite remarkable over the past few days, and that's how Bitcoin and the entire crypto market has actually been so resilient. It's actually quite remarkable, right? If you look at equities across the board, we've seen tremendous volatility. Um, for example, if I look at the South Korean um, index, it's been so volatile. Even though today has been remarkably positive, we've seen the volatility across the board, right? But if you come back to Bitcoin, we've just been trending up since the start of the escalation. Now, we've also seen gold, we've seen silver, but I think beyond just price performance, I think something much more interesting has been happening beneath the surface, and we really need to pay attention to that. This event has actually shown how different financial systems function when traditional infrastructure isn't available. And over the past few days, we've actually seen this play out beyond Bitcoin. We've seen crypto's use case actually come to the light here. So, for example, if you look back to when things started, the initial strikes happened at a time when most of the world's financial markets were closed. Right? Equity markets were closed, commodity markets were closed, traditional oil futures, they were closed as well. But there was one market that never closed, right? And that's crypto. And that led to a very interesting situation play out over the past weekend. Now, when the news of the attacks began spreading across the world, traders, analysts, journalists were trying to answer a very simple question of how the markets would actually react. Now, normally during geopolitical events like this, people would look to oil futures markets for the first signals. But those markets weren't open. So, where did people get their real time signals from? They went to crypto. And more specifically, many traders began looking at hyperliquid. So, hyperliquid effectively became one of the only places where people could observe price discovery. At the same time, many participants were, looking at Bitcoin and the broader crypto market as a real-time, sentiment gauge almost. Were markets panicking? Was capital actually fleeing risk assets? Now, I think this shows us something really, really important. I think it tells us that crypto isn't just, another asset class anymore. It's also a sort of continuous global market. When we see TradFi go offline for the weekend, uh, this market keeps operating, right? It never sleeps. Now, during major geopolitical events, that means crypto often becomes the first place where, global price discovery actually begins. Now, the second development we saw during this period tells an even deeper story about crypto's role during a crisis. Now, over the past weekend, when or immediately after the first US Israel airstrikes, what the data showed us was actually quite striking. And I'm just going to show you this chart and explain to you what we saw. Now, according to blockchain analytics firm Elliptic, basically, Iran's largest crypto exchange, Nobitex, saw a massive, massive rise in withdrawals immediately after the attacks began. Now, what the data showed was actually super, super intriguing. Within minutes of the airstrikes being reported, withdrawals from that exchange went up by more than 700%. So, within a single hour, close to $3 million worth of crypto was actually withdrawn, uh, and they were withdrawn into external wallets or offshore platforms. Now, this actually tells us something important as well. People weren't withdrawing crypto to speculate here. They were actually withdrawing crypto to get their money or value out of the system. Now, you have to remember, right, in moments like these, in a crisis, banks can freeze accounts, international transfers can slow down or completely stop, and local currencies like the Iranian rial we've seen has rapidly lost value. But crypto operates on a different set of rails. If someone has internet access and a wallet, they can move value across borders almost instantly. Now, what we appear to have seen here is crypto being used as a mechanism for capital flight. People were moving their savings out of local systems and into assets that they could control directly, away from any sort of banking infra. So that actually brings us to a very philosophical or a deeper question. What exactly is Bitcoin designed to hedge? Is it meant to hedge volatility, or is it more of a hedge of systemic failure, right? Now, for many investors in traditional markets, Bitcoin is often framed as another portfolio asset. And yes, of course, it is a portfolio asset, something that sits alongside stocks, commodities. But for people living through such conditions, it's important to remember that Bitcoin can effectively become a sort of escape valve and a way for people to preserve their purchasing power. This is a use case that was clearly highlighted over the past week. Now, for ordinary Iranians reacting to everything that's happening, Bitcoin wasn't being treated as a speculative investment here. It wasn't even a portfolio hedge. Instead, it was simply a means to maintain access to their wealth during such a difficult time and during a time when there's extreme uncertainty. So sometimes I think being in this space, we forget, or these ideas can sometimes feel abstract when markets are calm. But during moments of crisis, they become very clear. They become really, really clear. And funnily enough, in the middle of this entire geopolitical chaos and crisis, the entire crypto market suddenly now has an opportunity, almost like a real-time test, a chance to prove, some of the haters wrong, right? Uh, what we've been seeing is quite remarkable. Now, two of the most common arguments you hear is that Bitcoin could act as a store of value during global instability, and that crypto markets, because they trade 24/7, can become the first place where sentiment shows up. And right now, in the middle of this conflict, we're seeing elements of both of those ideas actually playing out. So, in a strange way, what we have seen is that this conflict has suddenly brought attention flooding back into crypto. It's reminded people that there is a financial market that never closes, one that continues operating even when, the rest of the global financial system might be offline. Now, of course, it's important to state here that it's still early days to draw big conclusion from what we're seeing, but it's interesting when you compare this moment to the conversation we were having just 2 weeks ago. 2 weeks ago, a lot of the discussion around Bitcoin and crypto was centered around an identity crisis, and now suddenly we have this major geopolitical shock, uh, and the spotlight seemingly has shifted back to crypto. So, in some ways, this conflict could end up becoming an unexpected catalyst for the market. Now, it might be too early to say that definitively, but it's something worth keeping in mind. Now, when it comes to the recent bounce we've seen in Bitcoin, to be honest, it's actually quite difficult to pinpoint one single reason behind it. But there are a couple of possible explanations definitely worth considering. The first one is purely technical, right? So Bitcoin, without a shadow of a doubt, has been extremely oversold. Now, if we look at the RSI levels, for example, we've been at some of the most deepest corrections and deepest RSI readings ever for Bitcoin. So maybe, just maybe, we were just completely oversold, and what we're seeing now is a sort of relief rally. But the second factor could also be a reason, right? We're seeing a lot of traction around the Clarity Act in the United States. But at this stage, I would actually say that the broader context we discussed earlier might actually be the more interesting angle to watch. If this conflict continues to evolve or escalate, and if we continue seeing volatility across equities, commodities like gold, then I think a very interesting scenario could start to play out. Just imagine for a second. Imagine a situation where traditional markets continue to struggle or decline while Bitcoin continues to move higher. We've seen that for the last 2 days. If that continues in that kind of environment, narratives can shift extremely quickly. People might start asking a different set of questions altogether. You know, we might see questions like, is Bitcoin acting as a store of value in this conflict? Is capital rotating into crypto because it operates outside of the entire traditional financial system? And believe me, if that narrative starts to pick up steam, FOMO will set in. And if this happens alongside positive developments like the Clarity Act, I think it could create a powerful combination for the market. Now, to be clear, these are just scenarios. We're not saying this is guaranteed to happen by any means. Um, of course, any escalation around the Strait of Hormuz or the broader conflict itself could create tremendous volatility around crypto. So that must be stated. We're also super early in the entire story. The conflict is still developing. Markets are still reacting and digesting the full implications. But it's important not to overlook what's happening here and the present moment. And before I, wrap up this stream, I just want to leave you with this tweet and this data to give some perspective. Of course, only time will tell, but this data set from BlackRock is actually quite telling of how Bitcoin usually performs during geopolitical shocks. Okay, so folks, on that note, continue monitoring oil, continue monitoring the news that comes out of Strait of Hormuz, because that is going to be vital for markets, including crypto. Um, we'll be back here next week for another crypto market recap. Uh, but until then, folks, follow us on Twitter. All of the breaking news regarding the conflict and the markets are updated there. Subscribe to our channel as well here, and I will see you all in the next one. Take care, folks.